This chart of waste management stock shows a slow but stable climb over the long term. Dojis can be found during periods of flatter trading activity. As the price of waste management stock increases, there are periods where there is resistance and naturally bearish stars are seen at these areas. Despite the overwhelming long-term uptrend, there are still periods where the market is flat to slightly downward when being resisted, and this is no surprise as dojis appear at these areas of indecision and hesitation. Here are great examples of bull hammers in sharper upswings. Towards the end of March, there is this gravestone doji, and normally it would be a downward reversal candle, but notice here it appears during an established downtrend. Therefore, it acts more like an inverted hammer with an element of indecision combined with bullish intent. The bullish intent quickly grew into bullish advantage when the next candles strongly closed higher to begin an early uptrend. Now the latest candle shows some downward reversal potential with its long upper wick. It is more of a gravestone doji due to the thinner body in relation to the longer wick, and that would be in contrast to this candle, which is almost a perfect bearish star with a real body covering the lower third of the candle. In any case, a downward reversal is more likely now since the newest candle has formed to strongly close below the low of this long upper wicked candle. Anytime there's a long upper wick in an established uptrend, it doesn't matter if it's a gravestone doji or bearish star, there is weakness at these upper prices that were not maintained. A downtrend does indeed emerge, and it continues lower and lower. At this point, there's a minor obstacle with the emergence of an inverted hammer and bull hammer that temporarily slow down the downtrend's development. Though keep in mind the bigger picture still shows an overwhelmingly bearish context, with the recent downswing point here with stronger closes lower, around the 55 area, which happens to be an established resistance area from the past few downswing points that also formed at this range. And not to mention these two candles themselves were red and closed lower eventually. This is still the same chart of waste management stock, except it is showing a lined chart where each dot represents a closing price. This helps to highlight the general higher importance of closing prices, which tend to form around major areas such as the 55 resistance. Here, many of the closing prices form at or very near the resistance lines drawn. These lines are at nice round numbers 55 and 55.25, which also serve to further highlight the importance of another major feature, the triple top reversal pattern that had formed. This explains why there was a significant drop in a relatively short period of time, and why there was also some slowdown around these areas because of the minor support range that forms from the upper range of a triple top reversal. 51 is also a level of significance, but more so in the short to medium term due to its more recent formation during those bull hammers that occurred earlier here. Certainly 51 naturally offered support. However, the overwhelmingly strong bearish context contributed to the easy breach of this moderate level with a strong close lower. Later on, 51 still influences price action, however to a lower degree, as it can still be passed with strong enough price action such as this other gap down and the emergence of this strong bullish trend after this minor bearish engulfing downswing. On the way back up towards 55, there is a candle that appears to be a dragonfly doji. However, it appears during an uptrend and near an area of established resistance. Therefore, it acts more like a hanging man candle, with the element of indecision from the thin, real body of the doji. It is indeed a balance of indecision and slight bearish sentiment as the market moves sideways to slightly downward, not able to close strongly lower to begin a downtrend. But now the most recent candle shows strong upper wick rejection with direct contact at the 55 resistance range. Now the market has gone from bullish to neutral. This dragonfly doji slows down the downtrend as lower prices are temporarily delayed, but eventually the market gets going and a clear downtrend develops. These inverted hammers have also served to slow down the drop. Therefore, it has been a clear downtrend, but one that hasn't been as strong as the prior triple top reversal from the same 55 range. As a result, the market is unable to strongly close lower towards 51 and instead forms a minor upswing. 54 is a nice round number and it manages to line up almost perfectly with the past few candles we focused on since the major upper wick rejection at the 55 range. It is more of a short-term level, but the minor upswing is being resisted nonetheless, with the market showing indecision and hesitation approaching record highs here, as evidenced by the dojis and reversal candles like this hanging man. A large red candle resumes the bearish sentiment and takes the market back towards the 51 level, which provides a natural first area of support to the early downtrend here, and not surprisingly, that results in a bull hammer that is quick to get underway for another minor upswing. This is a volatile period as 54 remains influential in resisting the climb back up, with several reversal candles fluctuating price significantly during these few weeks. The persisting bearish sentiment manages to hold the market down for eventual direct contact with 51, forming a very large dragonfly doji. Certainly the real body could be a bit thinner to be more in line with diagrams of dragonfly dojis, and the upper wick could be shorter, but the overall price action is still there, a narrow real body and a very long lower wick. It is certainly an upward reversal candle, and the red color doesn't matter that much here since it is a variation of the doji, and here there's also the addition of volume since this is a stock. It is good to see higher than normal volume here when there is direct contact of a reversal candle at an established support area, and that leads to a minor uptrend developing. This is a very weak uptrend to begin, due in part to the still volatile price action, large fluctuations from day to day, and the relatively lower volume that follows. A major row of green candles manages to finally surpass the 55 range, and even though the volume is not significantly high, it is consistent, and that is quite adequate to pass this major resistance area. Volume is not entirely necessary, but it does help to shine further light on the strength of a particular move, and if it was not present, such as with the previous example with the US dollar to Canadian dollar forex chart, where volume is not readily available, it would still be possible to make the same general references and inferences about these significant levels and the candle's price action, but it would be to a slightly lower degree of certainty. It is indeed a strong breakout to newer highs, and along the way there are even some rapid accelerations with price spiking rapidly higher, and in between here there are areas where the market goes neutral to slightly downward in the longer term context, This forms a resting phase for a large continuation. Essentially, it is a 3 methods rising, the same general price action except on a much larger scale. Similar to the previous 55 range, the 70 to 71 range offers some moderate resistance in the climb higher, and here the market moves neutral to slightly downward, indicating some hesitation and fear at these new highs. And not surprisingly, you can see some dojis along with reversal candles, especially this bearish star at the very peak. Waste management is able to surpass the 70 to 71 range despite it being a formidable resistance range due to another strong surge higher from a row of overwhelmingly green candles with strong volume, a very normal feature of consolidation here, where after the market breaks out to a newer high, it pulls back slightly with these minor downswings to get close or directly recontact the previous major level, in this case 71, 75, and a minor range forms at this area, which is held down in place by a series of candles showing various levels of upper wick rejection. Trading does become volatile at times, especially with this rapid spike down that is unable to be maintained. And it turns out that this is just another minor pullback in the long-term uptrend as waste management continues much higher, exhibiting similar price action to what has been covered in the previous phases back here.